Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the markets have drifted lower. You can see an 85 point of a dip in the markets. It's been an absolute lackluster kind of a trade throughout the course of the session. It's been choppy, but at the same time, we have not yet, managed to cross above 24,900 on a decisive level in trade today. We managed to only see 24,850 after having tested that on the lows as well. Only the IT sector is hovering higher in the green. Rest all of the sectors have also all slipped, including the broader markets, mid and small caps. The banks, all of them are reeling under some pressure. On the stocks, as far as the Nifty is concerned, you have IT names like Tech Mahindra, Infosys, HCL Tech as the stocks that are hovering up. You also have names like NTPC, Maruti, Hero Moto Corp. So some auto names, FMCG names like HUL is up in trade. So select names that are hovering up in trade. The PSU stocks are also lower, only NTPC up. On the F&O pack, you have Mazagon Dock Shipbuilders, CDSL, Supreme Industries and Mahanagar Gas as the pockets that are up in trade. When we also look at the defense names, some of them are still hovering up in trade, including both HAL and BL that continue to soar higher in trade. In the Nifty 500 space also, there are hardly few stocks that are up. NRB Bearings, for example, is up by about 7% in trade. Sterlite Technologies is another one that's been higher. Happiest Minds Technologies is another one that's also moving up in trade. So, and State Trading Corporation, these are all the stocks that are actually higher in the Nifty 500 basket. Let's now tune to welcome our guest on board. Mr. Sharad Avasthi from SMIFS is now joining in to help us understand his market outlook and share with us the strategies that he's following for his clients to give you an insight as to how you should be looking at the market current setup. Warm welcome to you, sir. Thank you so much for joining in. Again, there's been so much development on both global as well as local markets for you to be helping us with your fresh perspective. Globally, there is fresh concern on the geopolitical front between Israel and Iran. What's leading after that is the crude oil prices and the volatility on that front. Important for us to understand because we are an oil importing nation. Tariffs, there is still not much of a clarity apart from what's happening with the UK and China. No other nations have been really, able to get a deal for themselves. There are some indications that probably this deadline of July 9 could also be extended because it's a slow and ongoing process at this point. How are you forming your fresh global perspective at this point, sir?
Thank you for having me on the show. I think largely, yeah, it's geopolitical, and the fallout of that is higher oil prices. There could be some logistical, costs which go up because of this tension in Middle East. But our bet is that, over the next, even today, if you look at various places, I think again, there are talks that most probably one of the side is wanting a ceasefire, probably. So I think we might have people on the table over the next 7 to 8 days. And maybe the geopolitical part, particularly emanating from the Israel-Iran conflict, will die down over the next 5 to 7 days. Tariffs, we have a fresh tweet today as well. So I think that is something that will continue for some time. But over the next 8 to 10 days, you can expect more clarity regarding tariffs also. And once that is there, the next trajectory for interest rate should also be much clearer from the next MPC meets onward globally, particularly for the Reserve Bank here and the Fed in the US. So I think maybe one more meet, you might not have much of a rate cut, etc. The US Fed is meeting today and tomorrow. So maybe that rate cut this time does not transpire, but beyond that, I think the lower rate trajectory will certainly resume once we have clarity regarding the trade issues. And geopolitics also should subside over the next 7 to 8 days, if what we are hearing on various social media platforms is to be believed. So I think all in all, what we are thinking is that maybe we have been in a tight band of 500, 600 points for quite some time. But with geopolitical tensions coming under control and, the tariff issues behind us, much more clarity. Partly we have seen the IT stocks rally based on that expectation. So I think going ahead also you can expect a similar tenor where, we will have better clarity regarding how tariffs, etc., are going to play out and the geopolitical tensions die down. So high probability that we would see a good relief rally from here onwards, maybe maximum a week or two more of, range bound kind of movement. But beyond that,
Right, okay. Some technical glitch, we'll quickly sort that out and get back to our conversation with Sharad. At the moment, let's again look at what's happening with the markets. Several stocks that are pulling up. You have Inventurous Knowledge Solutions, one of the recently listed stocks that's up by 6.8%. You have Umang Dairies that's up in trade. Gokul Agro is up. Names even like interesting names that are also pulling up. We've already talked about Sterlite Technologies. These are the stocks that are doing well. STC from the PSU basket that's up. You also have names within the NBFC space that's up. Nuvama Wealth Management. So the brokerage houses spaces, stocks with wealth management business is also in focus right now. Names like IFL Finance, Muthoot Finance, Poonawalla. You also have Fed Bank Financial Services, Canfin Homes, all of that, NBFCs, housing finance, brokerage houses, they are in focus today. Insurance names have actually been pulling up. Now you have HDFC Life, ICICI Pru Life, also pulling up SBI Life as well. PB Fintech was up in trade. So the entire insurance basket is also moving up in trade today. PSU banks, most of them were up in the morning trade, but now you have IOB, PSP, central banks, some such stocks that are hovering up. Asian Paints has recovered, remember, 1% higher in trade. That's what's happening with the markets. Mr. Avasthi is back with us. Mr. Avasthi, that was the global perspective that you shared with us. I also wanted to come and talk about a little bit of what's happened, domestically. We saw a sharp rebound in the markets right after the RBI's rate cut. 50 basis points, something that the street was not penciling in, came in as a surprise, and that led to the rate sensitive sectors moving up, and even the entire markets across the board also showing us some trajectory on the higher side. Was that enough to keep the ball rolling? Will we need more, to do with the domestic push that we can do as far as the markets are concerned?
Yeah, I think in terms of rate cut and CRR cut, whatever they did and how it pans out over the next, 3-4 months as more liquidity starts coming in because of the CRR cut stages. I think largely September onwards, we'll have much more clarity regarding the impact of that. But I think it's a positive step from the central bank. They have been positive about it for some time now, and they have tried to, infuse liquidity back into the system, NBFC relaxations, credit card relaxation. So I think they are doing their bit, but I think they will not be able to push the markets higher. It has to be the consumption side and the capex cycle that comes up. So I think over the next 3-4 months, as the consumption cycle picks up, rural India has already been picking up. Once urban India starts contributing, there is a high probability that the capex cycle would also be strong. So over the next 4-5 years, most probably the capex cycle will be very strong for India, and that should benefit across the board. So I think those are the two triggers that I'm looking at. The initial trigger has been provided by the tax cuts and partly by the Reserve Bank, infusing liquidity into the system. But the second part has to flow in terms of consumption as well as the capex side from the private players. And I'm very hopeful that over the next 3 to 5 years, we will see strong capex revival from the private side as well. And consumption should be visible in the monthly data that we see from here on.
Okay, got that. Now let's talk about the several sectors and themes that we should be looking out. I remember having discussed the IT sector with you. The sector is showing us some bounce and some momentum across the board, large caps, mid caps as well. Anything has changed for the course that you would look at the IT space at, or do you just think that this is going to be momentary?
No, I think I would continue with that view, because as we spoke last quarter, when the quarterly reviews etc. came out, the mood etc. was very turbulent because of the tariff situation. It was at its peak. Partly it has died down, and I think by the time they announce the next quarter numbers and they provide even outlook, most probably they will also have much better clarity about how the tariff situation is playing out and the possible impact of that on their economy and global economy. So I think the forward outlook from most IT companies in the next quarterly numbers will be very positive. Most probably the market is taking into account that space. So I think, yeah, you should continue if you want to play a larger theme. Maybe a Wipro and HCL Tech make more sense. Uh, Coforge could be good for around 2400, 2100 kind of targets. Uh, on the second line, I think something like a Birla Soft could be a good idea. You could look at valuations are attractive there also. And the likes of Infosys, Mashtech, they could benefit out of the BFSI space exposure that they have. So I think all in all for IT from here onwards, I think for across the basket, the valuations are fair. They are not very cheap. They are not very expensive. So once the outlook improves, there is a possibility that these counters get re-rated on the upside.
Okay, so that's the IT pack for you. Let's look at the ones that have been buzzing, and we've discussed that as well. Defense, railways. How are you looking at the fresh move? I think BL again for the first time has crossed that 400 odd mark. We've been seeing what's happening with HL. Shipbuilders are again soaring as well. New order books that are coming in to perspective. Your sense, is it again getting into the frothy zone? Would you caution at this point in time, or do you still believe there is a lot to look at, especially given the new world order, rising tensions across the globe?
Yeah, I certainly think there are two changes that have happened. Firstly, there is a ban on Chinese ship kind of situation, which the US is talking about. So that would culminate very well for, shipbuilding companies like the likes of Mazagon,
Okay.
Cochin, GRSC. Add to that a submarine order that Mazagon has been talking for quite some time. If that percolates into conversion, I think there is a high probability that Mazagon could even get re-rated further. So this is the same case for the defense stories also, well, the likes of HAL, BEL, BDL, BEML. I think the type of addition that is happening to the order book is going to be substantial. And as you rightly pointed out, the current situation also gets you more headroom in terms of the export opportunities. The only flip point could be how fast these guys can execute because they don't have that kind of fast execution track record. If they can pull that up, I think maybe to expect them to do it over the next 1.5 year would be difficult. So, occasionally you will get these kind of situations where they might not execute as well and you get a correction. That would be a very good time to enter. But at the same time, I think if they can pull the execution plug and the order book keeps, accruing at the rate at which it has, and big orders are coming in, which are substantial in respect to the current size of the order book, there is a high probability that these companies could get re-rated further. As far as frothiness, I think now what we are looking at, the first level of order book increase that happened, that will start reflecting in the numbers this year, next year. So I think now probably the froth is not so much into the numbers, and with the kind of mode they have, I think new entrants to come in and make a space for them on a surface to air missile or something like that, it is not going to be very easy. So I think these guys have their place. I think they will continue to grow. Maybe occasionally 1 or 2 quarters you have some disappointment. That is a time where you have to hold your horses and stay put into these companies. So I think, yeah, I would not call this frothy valuations. I would not call them cheap valuations. But I think these are stories that you should be holding for 3 to 5 years. I think the forward outlook could substantially change with 1 or 2 big order wins. So continue to hold them if you have them. If you are looking at buying them afresh, I believe 25-30% you can allocate now. And maybe, every dip that you get on some news or the other, whether it's directly related to the sector or stock or something else, that would be a good time to add more.
Okay, fair point. Let's also understand a little bit on the auto space as well. Why I'm bringing this up is again because it's giving us a deja vu of sorts. What happened with the semiconductor issue and how it dragged the entire two-wheeler space. Now we're talking about rare earth magnets and the issues that are erupting there. Is this a major concern? Recently Maruti did cut down its own production targets for its e-Vitara. Does this have to be really looked at as to what kind of an impact industry-wide could we see, or the impact could be far limited than what happened with semiconductors? How would you explain this?
Yeah, I would say it would be far more limited than what we experienced post-COVID with the semiconductor issue. I think it was a total collapse of the supply chain at that point in time. This time, we are not expecting that. This is largely pressure tactics or politics. And semiconductors are very complex engineering products, but metals as such are not very rare earth metals, particularly the magnets that we are talking about, are not very complex metals. But that is the reason most people did not want to venture into it, and China built up the scale there. So I think it's going to be a temporary pause. You have already seen many people talking about putting up, the magnet facilities here in the US, and I think a lot of it will get reactivated. So it's a short-term hiccup. Maybe China can play around with that theory for a month or two at max. So I think that's it. Beyond that, it would not be very easy for them to arm twist based on this magnet issue because it's not a high value, means complicated engineering item. It's a very simple item, but they have the scale there. That's the only advantage they have. And it's not that other countries cannot, because I believe India, Australia have magnets there. It's just that no one bothered to look into details because they were getting it from a cheap source. So I think it's not very material. You should not be too bothered. Maybe a month or two of problems, but then it would realign. And even China would not want to, politicize or arm twist on the basis of metal or item, which is not technologically very difficult to produce by other countries.
Okay, let's also try and understand about some of the other spaces as well. Pharma is something that I wanted to come up with. Biocon has started off with its QIP there, but at the same time, what we've seen with Sun Pharma observations of late, at the same time changes on the top level. That's what keeping the pharma stories updated. Healthcare, there's a renewed focus again. Stocks like Max Healthcare, they're coming back into focus. Apollo. How are you looking at the pharma story at this point, sir?
See, across pharma and healthcare, I think pharma is not very cheap at current valuations, and there is this overhang of this tariff issue that's coming up. I think Sun and Dr. Reddy, they also have exposure to the Israel part of it, so that also creates a bit of nervousness. And in case the logistical issues do blow up, I think that also creates another pain point for most pharma companies. Like post-COVID, when rates went up, and when then we had this Red Sea issue, most companies had spotted that logistic costs are something that are eating into their margins. Though, barring Sun Pharma, most of the companies are largely working on the generic side of the business in America, so I don't think they will have much of an impact. But I think valuation-wise, also Sun doesn't seem to offer much upside from current prices. So the likes of Sun, Cipla, I think valuation-wise they are fairly priced. Dr. Reddy Biocon, I think the Dr. Reddy is a good story in terms of valuation comfort. There might not be much growth going ahead. But Biocon, I'm certainly very bullish. I think the way they have created the product basket and the way biotech, etc., can grow in the years to come, biosimilars particularly, I think Biocon probably is a great bet to have on your side. Hasn't done much, might take some time because of this virus acquisition, the debt issues, etc., need to be brought down. But I think they're moving on the right trajectory. You might have to wait a bit longer, probably. But I think Biocon is something I would look very interestingly. It's a mix of growth and a good track record. And I think biosimilars is going to be a very interesting space. So I think Biocon is a good bet to have. Rest of the pack, I think, maybe fairly to normally valued. I can't see much upside there, maybe barring a Dr. Reddy.
Okay. We are just approaching the end of the first half of the current, calendar year, sir. In the second half, how is your investment strategy going to be different? Are you continuing with the same themes that you have invested in the first half? Do you continue to want to put in more funds as the market sentiment improves during the second half? And what exactly would your focus be? If you could name a top 2-3 sectors that you will be betting big on, and a few stocks that you may have added afresh, sir.
I think in the current scenario, we are fully invested. We don't think these are valuations where you need to sit on cash. We think the next 6 months are going to be very bullish for the markets as a whole. Regarding sectors, I think BFSI as a space should do well. The small finance banks, the banks that have exposure, to the MSME and microfinance side of it. Uh, IndusInd has had its issues, so let's avoid it. But I think Bandhan could be one idea you could look at where probably we have bottomed out and we could improve substantially from current levels. PSU banks could be an idea that you could look at. The small finance banks and the NBFCs could be one space we could look at. Fed FINA is one idea we like. I think the mix of gold loans, LAP, etc., and improving return ratios. That could be a good idea for targets of around 175.80. Fed Financial, basically, Federal Bank subsidiary. PSU banks across the board, I think, are good bets. What else have we added? We have added Tata Tech, we have added Tata Motors before this correction. After that, it's corrected a bit. But I think, again, these are good ideas to bet on. And I think Tata Tech, with the type of expertise they have across, the whole conceptualization of electrical vehicles, impact in autonomous driving, airlines, I think all that should play out very well. So we are working with targets for targets of around 900 rupees in Tata Tech. Similarly, for Tata Motors, we believe we are temporarily a bit of a slowdown, but 35,000 crore capex. It should play out very well. They are trying to revamp the whole JLR structure. So I think that should play out very well. Maybe some dips here and there. But there also, I think I'm very bullish. I'm holding for targets of around 900, 950.
Okay, got that. So those are the few ideas and themes that Mr. Avasthi is working with. Now help us understand, sir, when it comes to avoiding something, what would you stay clear from in second half?
Across the board, I think healthcare probably, barring Narayan Hrudayalaya or NH, I think that hasn't corrected much and the valuations are on the higher side of the vertical. So I think that is one space which I think is a bit expensive. The frontline capital goods is something that I feel are a bit expensive, the likes of Siemens, ABB, though I'm telling that their 5-year cycle is strong. But I would rather bet on a BHEL for targets of around, 280, 290, maybe an Engineers India Limited. Those look like good ideas. But the likes of ABB, Siemens, even for that matter, Hitachi, I think they are fully to fairly valued. I can't see much upside there. So I think I think largely it should be two sectors, capital goods. Some of the real estate names might not give you much upside, though I doubt whether they will correct much, the likes of DLF, Godrej Property. So I think these are some pockets you could avoid. Some of the stock broking or, what do you call them, wealth management businesses, they are trading at obnoxious valuations. So I think those might not give you much return. So those are best avoided.
Okay, fair point. Now, Mr. Avasthi, just to ask you right in the end, what about IPOs? So far the going has been pretty slow in the first half. We've had very few IPOs. Have any of them appealed to you? Are you also looking at HDB Financial that investors are keenly awaiting, probably by June end? How would you really expect the IPO space to perform, and any key exciting names that you have looked at?
See, I think the second half is going to be very exciting, but my ideology is that I want to understand the valuation part of it. So you can't really comment much till you get to know the prices, and nowadays you get to know the prices just a day or two before the IPO. So it's very difficult, but I think there is a lot of interest around NSDL. When you rightly mentioned HDB, then probably Hero FinCorp will also come up. Probably OYO is also going to come up. So I think the second half, or largely till the next financial year ends in March, we might have a very active IPO market. Right now, what is coming up are small companies, but again, for a change, I feel at least 50-60% of the IPOs that have come out at decent valuations rather than pricing it at the brim. So that's a positive development, because in between we were getting them priced to perfection or even beyond perfection at some point in time. But right now I believe they are leaving something on the table once the market sentiment improves further or the companies perform, in terms of quarterly numbers. These companies could give you good money. May not be very well-known names, but I think they are leaving something on the table in terms of valuation.
Okay, fair point. Well, Mr. Avasthi, we'll leave you at that. Thank you so much for being with us on the show, explaining to all our viewers the entire strategy on the markets. We'll see you soon on another edition of Market Today, sir. Thank you so much. All right, viewers, we'll start wrapping up. Last 5 minutes to go before the markets shut shop now, 98 points lower. So we are hovering around 24,847 odd levels. A choppy, largely range-bound, kind of a trading session, but muted and lackluster. 0.4% decline for the Nifty now. All the sectors are down in trade. You can actually see only the Nifty up into the green among sectors, up 0.6%. It's the pharma index that's down by 1.8%. Metals, oil and gas, PSU banks are the top losers. This is despite the fact that India VIX also slipped by about 2.5% or so at 14.4. IT stocks like Tech Mahindra, Infosys, TCS hover among the top gainers on Nifty. Asian Paints also moves up in tandem. NTPC, Maruti were the other top movers. On the lagging side, you had Dr. Reddy's, Adani Enterprises, Eternal. Names like Tata Motors and Sun Pharma dragged in today's session. Mazagon Dock Shipyard, one of the top movers in the F&O space. Remember Kush Godasara, who joined us right in the morning trading session. This was his first pick that he talked about in the stock markets even before the markets opened, and it's moved up 4% higher. CDSL, Mahanagar Gas, these were the other movers. While on the lower side, Sona BLW Precision, Jindal Stainless Steel and Granules India were the top laggards. As far as the markets are concerned, seems like we are going to be having another down day. But let's see whether tomorrow is a better day. We'll leave you at that. Viewers, do stay tuned with us onto Business Today Television. Coverage on the markets and beyond in the world of business and finance continues on your channel.
Amid twisted metal and shattered